Hey everyone, welcome back to the channel. Today I'm making probably one of my most important videos just about investing in general. You can apply these rules to Bitcoin, you can apply these rules to the stock market, you can apply these rules to Pokemon investing, obviously. So this will be my story, my experience with investing, and the stuff I learned personally going through it. And you can see some of the stuff I invested here. Like obviously you got Pokemon here, Pokemon cards as collectibles. You got Bitcoin, you got the Nasdaq 100, which is the top 100 companies in America. And then you even got more traditionally boring stuff like Canadian banks, the big banks here in Canada. But as you'll see, I think everything has its own pros and cons and its uses, and they work well together. So first off, just want to show you guys the profits I've made over the years. So this one was made with a financial advisor, but I picked from the funds, I researched them, I looked into them, and I picked the fund that I wanted rather than one suggested to me. So I still kind of view this as my my win, although this is not me just picking the stocks, it's me just picking the fund that I still hold some with a financial advisor, right? So gain there 216,000. Investment portfolio number 2. This one's 125,827 gain. This in this situation I picked all the stocks or ETFs or whatever that's in the fund. You could see that I'm getting interest and dividends from here. From the financial advisor one, I'm not. But here you can see that I am receiving a bunch of interest and dividends, and we'll talk about the benefits of receiving dividends later on. And portfolio number 3, again, amazing dividends. This one surprisingly, even though I focused on dividends, this one surprisingly made more by going up and appreciating in stock price or ETF price value. So it altogether here we got $314,798 of gain. And here we have my Wealthsimple. I just screenshotted the app. This is pretty much like our Robinhood, I guess you could say. So it's just personal investing, and then you can invest whatever you want. You can see there I got some Bitcoin, some banks, and that's made really insane returns. Obviously, this is not normal to make plus 336%, but I'm benefiting from the crazy growth of Bitcoin here as well, although everything is up, thankfully. So here with the last portfolio, we'll be looking at $441,612 of gain. So altogether, if you add all the portfolios that I just showed you together, that's over $1,098,332.39 in stock market / Bitcoin gains. So this is not counting my unrealized Pokemon investment gains, which are right around 50,000 now. If you take what the portfolio value is, if you guys watch my Pokemon investing portfolio video and you minus how much I put in it, we're around 50,000 profit. And then unrealized real estate gains of 100,000. So this is probably more, but I know for sure it's at least 100,000 because I bought an apartment in a more affordable part of the world where I could, retire early if I so chose. Paid for it in cash, 150,000. And these buildings were made in phases, right? So the first one, they're all the same area, same material, same everything. But the first phase was cheaper. I got in on the middle phase just because things are going up, cost of materials going up, tourism rising in the area. So when I got it was 150,000 for my apartment with that kind of square footage. And then the next phase after my building was done, they upped it to my square footage would have been 250,000, and all those apartments sold out, right? So clearly in that area for that size of an apartment, people are willing to pay at least 250,000. Keep in mind this last phase was a few years ago, so now it might be even more. but this is just at least 100,000. I have some other properties and even some properties here in Canada, but they're not fully paid off, so I'm not going to count that within, you know, and when you until you sell it, you don't really know what it's going to sell for. You can't confirm it, so I won't put anything more than that. But either way, it's over 1 million, right? Like the thumbnail promised, significantly over 1 million actually. And yeah, let's look into what I learned and how this was possible for me, right? The way I look at it, and I love the Matrix, so this is Matrix inspired, but I do think it's useful because this stuff will be life changing if you apply it, and you can get out of the 9 to 5 rat race, right? See through the Matrix, get out of the Matrix in that sense. I truly believe that. So here are the 5 rules for success in investing. So one is to understand the potential of investing. So for me, it was first discovering the FIRE movement, financial independence, retire early, that it was possible, right? I always assumed people would just have to work for their whole life until, 65, and then they retire. But when I was exposed to some of this stuff, it sparked something in me, this financial freedom philosophy, and then I pursued it. So financial freedom pretty much means I would describe myself as financially free at this point. So to me, that means able to live off of your investments without ever running out of money. So I can have my investments pay for my living expenses pretty much forever, and we'll go into more detail about that. But that doesn't mean just lay on the beach all day, right? Like, I'm making this YouTube channel. Do I need it for financial reasons? No. Do I have fun with it and want to see what I can do with it? Yes. And I want to share my passion, which investing is my passion, right? So that is something you can always come back and do more and even make more money. But I'm just saying, once you hit this certain point, you don't have to work. So it's coming from a better place, right? Power of compound interest is very important to understand as well. It's crazy that you could invest 130,000. I just put that because during my last Pokemon portfolio it was 130,000, around that mark, dollars. That this will grow to over $2.2 million if you just leave it for 30 years, assuming it grows at an average of 10% per year. Now, I say 10% because the S&P 500 grows this much, which is pretty much the top 5, a collection of the top 500 companies in America. And most money managers use this amount as a benchmark for success, right? I would say Pokemon outpaces this, but it's harder to sell too. So there's always pros and cons. But yeah, so even if you get just that average 10%, you'll be a millionaire eventually, right? If you give it 50 years, right? The more years you give it, the crazier the effects. Instead of 30, it will grow to 15.2 million. Passively, without you doing anything at this point, that 10% will pretty much give you 1.5 million a year for doing nothing, making money while you sleep. So I want people to understand that, this is possible, because no one will pursue it if they don't believe it, and that becoming a millionaire through investing, not gambling, is just a matter of time. And I put gambling because I do think there's a difference, and we'll cover it as we move forward. So number 2, the big thing is conquer fear and greed. These are the main things you deal with investing, right? You've heard FOMO. That's the greed part. But be stoic. That means not freaking out and making drastic decisions. That's very vital. So most people sell during recessions because of fear, right? I've seen it myself with people close to me selling when there was the pandemic and the stock market crashed and people were selling. They were afraid that, even though something always happens, it's not always a pandemic, but something always happens that makes the market fall and cause fear. And they sold, and then they buy during all-time highs because of greed, and everyone's now talking about it. And so this is a way to lose money. There was studies done that if you missed the few best trading days of the year, that average 10% will go down drastically. right? If you miss enough, you'll even start losing money. So it's very important to not freak out and pull out money. In fact, be fearful. This is what Warren Buffett said. I don't agree with him about everything, but I do agree with him about a lot of his sayings. And this one is be fearful when others are greedy, and greedy when others are fearful. So it's counterintuitive. It feels wrong because, the human is worried when they're losing money. They're happy when they're gaining money and they think it's going to keep going forever. But what's important is that if the market's at all-time highs, that's not a good time to start putting in money. Obviously, eventually if you put in money over time, it's about time in the market, and we'll get to that, not just timing the market. But be cautious, be hesitant when everyone is willing to pay obnoxious prices for stuff that a few months ago was a lot cheaper. That's all I'm saying. Be cautious. And when others don't want to touch stuff, right? The Pokemon's a great example. No one wanted to touch Scarlet and Violet for the longest time. You could get it for around 100 USD, pretty much any booster box you wanted. And now everything has run up. And now people are buying, right? The good time is when nobody wants it, that's when you buy it. And most millionaires are made during market crashes, not during bull markets, right? So my own personal example was obviously all those booster boxes in Scarlet and Violet I was buying while they were low price, not desired. And just a caveat here, you do want to have a product you believe in long term and that you could see going up over time, right? Don't invest in something crappy just because it's low. That's not what I'm saying. I'm saying if you believe in a product, then invest in it while others aren't excited about it versus when everyone is crazy about it, right? I personally, during the pandemic, it was very simple. A bank in Canada dropped big time. They give dividends though, which is pretty much a payment for holding the stock as a shareholder. For the banks, that pretty much never went down in 100 years. At worst, it stayed the same, that payout, and then it never went down, as far as I know. So it's simple to buy. For me, it made sense to buy at that point, even though everyone was scared what's going to happen. The stock market, the price crashed of the bank stock, but that meant I was getting more bang for my buck in terms of the dividend. I was getting a higher percentage per year. That's called a yield in investing. And so I'm like, okay, this is perfect. I'm going to be paid more to hold it while the market goes up. And then I had the opportunity to obviously get that rebound money back. And that was one of my first big plays, if you can call it. And it worked out really well. I was making money. I didn't have to worry. And then when it bounced back, I benefited from it. And I put it in more diverse things, so it's not all in one place. So sometimes a 100% return in a year is good enough. So this is a kind of joke, but it's funny to me that Bitcoin, even big corporations are now investing into Bitcoin. BlackRock, right, the biggest money manager in the world, is talking about Bitcoin. And I knew it was going to do well, right? I bought that during the dip after the crash in 2021, 22, right? I was buying during that crash. And even this year, I think it's going to go up significantly. But I still have friends who aren't excited about 100% return, which is insane. Because like I said, in the stock market, and money managers are focused on 10% or less sometimes. They give you conservative, safer, quote unquote, investments that'll return like 5%. And they think that's good. So it's just funny that I have friends that aren't excited about making 100% in something safer like Bitcoin, the biggest cryptocurrency, right? And we'll try for these little coins that, sure, you could blow up, but it could blow up, if you know what I mean. It could go down, it could not move, you could lose a lot of money. Even if you make money, you got to know when to take it out, right? They don't plan on holding the little coins long term. They just want to sell the crypto at a high, and then if they will be able to time it right, I don't know. But that is what I think of as gambling. If you're not willing to hold something long term, and you're trying to get in and out in a fast and crazy way, that's gambling, and that's not what this channel is about. That's not what we're talking about here. And that brings us into have a long-term outlook when it comes to investing. Patience is key. And like I said, time in the market beats timing the market. Now, yes, ideally, you want to buy when things aren't at all-time highs. And if you have to sell, you want to sell when things are at all-time highs and not when things are at lows. So these tips will help you. So don't use debt. Don't borrow money and then get worse and worse into debt while you're waiting for things to go back up potentially if there's a market downturn. And don't invest money you'll need in the short term, right? We are long-term investors. If you know you're going to need something next year, then don't put it into an investment, whether it's Pokemon, whether it's Bitcoin, whether it's anything, thinking, okay, I'll take it out in a year and I'll make money off it. You don't know. You don't know what can happen. You don't know what kind of black swan events or unexpected events can happen. So you never want to put yourself in that kind of position where you're able to lose money like that, right? I'm going to give you an example. For me, I invested in Pokemon Japanese 151 booster boxes and on the PSA 10 Pikachu Master Ball. I lost money on both of those, but I always joke about that, but I didn't technically lose because I didn't sell, right? Even I think, although I think English is a better investment, even I think that if I hold that stuff long enough, in 5, 10, 20 years, it's going to be worth more than I paid for it, right? So I technically didn't actually realize those losses, and I don't think they'll remain losses. And that's the beauty of not needing that money right now. So I don't need to stress about it being down. And this is what I've been saying, guys. If you don't feel comfortable holding an investment for years, then don't hold it for a minute. Don't be like my friend that wants to buy, they're called shit coins, right? Wants to buy those small coins because random YouTubers pump them up. And then, maybe it goes up. Are you going to time the exit properly? It's not always hard to make the money. Like, there have been a lot of people that got lucky, but keeping the money is the hard part, right? I have another friend who also on these little shit coins last cycle made over $1 million. His family, he was telling his family, right? He thought he was big shit. He was telling his family, "Oh, I made over $1 million." They're like, "Okay, please sell, like take it out." And yet thinks he knows what he's doing. He's an expert investor now. And so he kept it in, thought it would keep going up, and then he lost it, right? So in some of these markets, and I do think Pokemon is good for being safer in that way, especially with sealed product. But some of these markets can go up quick and go down just as quick. So it's not impressive to just make money. It's impressive to keep money. And we're going to be talking about how to keep money as well. And so the message here is people want to get rich overnight and end up losing what they do have gambling. So when you lack patience and you want everything super quick, you're going to resort to not investing but gambling. Like I said, you should be content with making 10% per year. That should be fine. Maybe work on 20% per year if you can manage it, or aim for that. But people that want to make like 700%, 1000% every year, it's just not realistic. And in that situation, they're going to end up going for those Hail Marys, those big risk, big reward plays. And more likely than not, they're going to end up losing money rather than making money. There's always exceptions to the rule, but you can't teach based off of exceptions, right? This is about investing. There's always people that win the lottery, although they end up losing it, right? Studies show. But at the end of the day, do not rely on gambling for your future. That's what I would suggest. So understand inflation, the hidden tax. So there are finite assets versus infinitely printable money. If you didn't know, and this is important for investing, if you don't invest, you are constantly losing purchasing power. What does that mean? it means your money can buy less every year, right? So this is why I invest into assets like Bitcoin, which will only ever be 21 million, right? While they're constantly printing money every year. So even if demand stayed the same, Bitcoin would go up forever, right? And I do think demand will increase as you have BlackRock and people promoting it so much. But even if it stayed the same, it would increase forever compared to the US dollar. Just keep that in mind. And it's also why Pokemon sealed products goes up after its print run, right? During its print run, they're printing, but that's usually why the price stays lower when they're printing. But we're in a new crazy market where that's not even a given. But when more is opened throughout the years, there's less every year while the ever weakening dollar is going down in value. And so it makes sense that those weakening dollars that are going after those products that are diminishing while the dollars are increasing, it'll take more dollars to buy the same product. So this is what I'm saying. Even if stuff stays the same in quantity, you're going to have, and demand, you're going to have a rise in price because they're always printing money. But since the pure beautiful thing with sealed product is, in theory, people are opening it every year, so there's less and less. So you have that going for you as well. It's deflationary in that sense. And then hopefully, Pokemon continues to have crazy phases like this now where more demand is increasing as well. So that is why sealed product is such a good investment long term. And then another saying I like is make money while you sleep by putting money to work for you or be forced to work for the rest of your waking life, right? You can make a lot of money this year working a job. And if you leave it under your mattress or in your bank account, not invested, you're just going to get poorer every year. It's like you're not protecting that time you invested to make that money. That's why learning investing is so important, because your money can actually work for you. And not only are you protecting that work that you put in, those hours of work, that effort, that energy, you're also potentially making money because the investments are doing well, right? That's something cool. And just for a reference, a Big Mac used to be 45 cents in 1967. So that gives you a sense, even though some things go up even at a faster rate, like housing, for example. But even stuff like a Big Mac used to be 45 cents, and look at what it is now, right? So inflation, very real. You can't, if you have an apple, you have $1, the apple costs $1. If you print double the money, double the supply of money, then the apple won't still be $1, it'll be $2, right? Things are getting more expensive as they print insane amounts of money every year. And number 5, minimize the costliness of a mistake. So we've all FOMO'd before. I'm not here talking like I'm perfect. This stuff, the results you've seen of what I've made have been after, like, we've also taken into account the mistakes I've made. Just an example is during the last year's Pokemon alt art hype bubble, right? I bought a bunch of stuff before the hype. And so I did end up being profitable on a lot of that, and I saw some insane gains on the way up. But I was thinking, I don't want to miss these other alt arts. So I was buying on the way up when everybody was FOMOing. And although most of it, we've seen even new highs for a lot of the cards, some cards still haven't recovered to the amount I paid for it. I think they will over the long term. But that was a mistake on my part. I could have waited a month or two. It would have fallen. I could have got it for way cheaper, or been okay missing out if it just kept rising, which usually nothing ever just keeps rising forever. Like long term, sure, but there are ups and downs in between. So that was a mistake I made. I could have made much better returns on those specific investments if I just waited or been okay missing out, because that's fine. You're still making money. You don't need to. Even Warren Buffett says he invests in stuff he understands. He missed out on a bunch of opportunities. Like, he doesn't like Bitcoin, right? That's fine. But he missed out on massive gains, right? I would say I made hundreds of thousands of dollars on Bitcoin alone. And I even used some of it as a down payment for a house. So you can make money off of this even if Warren Buffett made money off of something else, right? You don't need to be in everything to reap the benefits, and you can be okay about missing out on certain things. And that might apply to some of these crazy Pokemon sets that are coming out right now where you can't even get them. Like I was going on Pokemon Center to get the new Journey Together anything. I wanted the ETB obviously, but the site just crashed. I couldn't get anything. And so now on the secondary market, what are you going to pay? Like at least triple everything, probably more. So yeah, that I'm okay with missing out on cases there. I probably will get one booster box to add to my collection at some point. But if prices stay ridiculously high like that, I'm okay with missing out. I got a lot of stuff that's appreciating, a lot of stuff that I'm making money on. I don't need to get a case of every set that comes out, especially when they're overpriced. So, yes, we all make mistakes. Learn from your mistakes, but this is key. Don't make mistakes that take you out of the game. So, don't put all your eggs in one basket. For this, I would recommend diversifying, right? I have tech stocks, like ETFs of tech stocks. I have Bitcoin, I have Pokemon, I have real estate, I have dividend paying stocks and ETFs, which, like I said, I love because you get paid to wait during the downturns. You should be excited when stuff is crashing because everything is a good deal. Don't ever put yourself in a situation where you're in debt and stuff is crashing and now you got to sell your stuff to pay your debts. That's crazy, right? If you're doing this right, you will get excited. You will see opportunities during crashes, market crashes. That goes for Bitcoin, that goes for Pokemon, everything that goes for stocks, that goes for real estate. It's an opportunity to buy at a cheaper price, right? So it might not be bad to also keep some, they say, dry powder on the sidelines, aka some cash on the sidelines, just in case you get a good opportunity, especially when the market is crazy. And in my view, I know some people don't like diversifying, but in my view, diversifying gives you the best of all worlds, right? So I have that monthly passive income while I weather volatile times. I could live off of that passive income if I want, which is the beautiful thing. I could leave my Pokemon investments, I can leave my Bitcoin, I could leave my tech growth stocks to just grow while I just spend the dividends, which is the beautiful thing. It's like making money while you sleep, getting paid as if it were a job, but just from dividends. And then I never have to worry about selling anything at a inopportune time, at a bad time, because, hey, if I need money, I'll just collect it from the dividends. So massive long-term appreciation you'll get from, again, you have to do your own research. But in my opinion, you'll get massive growth appreciation from Bitcoin, from stuff like Tesla, right? Those successful tech stocks, and from the right Pokemon investments. Here I put PSA 10 Magikarp because you know how much I like that. But obviously that applies to sealed product too. These things will go up. You need to give it time. And so for me, the psychological benefit of having dividends, even if those things won't grow as much as this other stuff, helps because I'm never in a position where I'm like, market's down. Okay, now I have to sell this stuff. I lost money on it. You only lose money when you sell, right? So put yourself in a situation where you don't have to sell and give it time and you should be fine. So those are my main takeaways here. If you want me to cover exactly what's in these portfolios, like what kind of dividend stocks and passive income investing stocks I am invested in, if you want to know, like, how much is in Bitcoin, how much is in tech stocks, just let me know. I could make that kind of video in the future if you guys are interested in seeing that, and I can break it down. And if you guys wanted to, you can invest in the same things. Up to you, do your own research. But I gotta say, so far this has been very successful for me. I know some people are afraid to lose all their money through investing, but I've been at it for like investing in general for a long time now. And yeah, the risk is not investing, because inflation, you're just losing money all the time. You got to learn to invest. You don't need to just copy me, but do your own research, learn what works for you, and don't be just sitting on cash as it burns away through because of inflation. All right? That's it for this one, guys. I'll see you in the next video.